Hello, everyone. Welcome to the stock-specific class here for Thursday, March the 24th. As always, if you have any questions during class or during the week, and then if there's any questions I don't get to in class, you can send those to jerry@traderspro.com. And that would include a lot of times I don't, I don't get into stock picking where, in the classes, I don't like to do a lot of, well, you look at this chart, because there's so many students that if I kind of go down that road, then that ends up being the whole class. And so I try to encourage you that if you've got questions on individual stocks, if I have time, I don't mind going over a couple if they're being posted in the question section. But if there's a lot of them, I'll just have you email them to me, and I'll be happy to give you input on those during the week. So just keep that in mind, and just send those to jerry@traderspro.com. All right. Now, just let's go through the directional alerts real quick, and then we'll look at the charts, and we'll kind of talk a little bit about what we were covering on Tuesday. And is anything clearer after 2 days? Is the direction a little bit clearer after 2 days? I think it's getting a little bit clearer, and that's the good news. But we can see that again that the trend is clearly up. We've moved into the buy area on momentum. We're still not quite there on breadth, but we're moving in that direction. It's still kind of in the trending area right here. That is something to keep an eye on, though, because you want to make sure breadth is participation. You want to make sure there's a lot of stocks participating in the rally. If there's only a few stocks that are causing the market to go up, that's always a concern, because obviously if those stocks stop going up, or they pause, it causes everything to pause. You want to see a good, healthy uptrend should have a lot of participation. So we'll watch that. If we keep moving up on momentum, but breadth is kind of staying right here and it's lagging a little bit, we'll make sure we're aware of that or note that if that does happen. But not a huge discrepancy here, but that's something just to kind of keep an eye on. By the way, we could nitpick everything in these updates, and there are times where you'll hear me present an argument of why something is bullish for the market, and then I'll turn around and say that, well, this is bearish for the market, and you might sit back and think, well, great, that did me a lot of good. Basically, you told me the market could go up or it could go down. I might as well just pull out my coin and flip it. But no, don't be afraid of having conflicting data. I think the opposite is true. I think you should never expect to have everything showing you that the market it should go up or the market should go down. In fact, I'll tell you, some of the when I see everything showing that the market should go up, I start to do the opposite. I start to say, oh, wait a second here. That's like if it's too good to be true, it usually isn't. If it looks like there's no way the market is going to drop, it's going to go up. A lot of times that's when it does drop and does get into trouble. So I do like to see conflicting signals. And then really what you're trying to do, though, is just say, okay, well, there's conflicting signals, but what are the majority of them showing? And what is the chart doing first? And then are some of these conflicting signals confirming what the chart is doing, or maybe telling you to be a little bit cautious? And so just be aware of that as we go through this assessment, that we're not trying to see if we can line everything up in our favor. Hold on. There's a question here on if you can't add you can add stocks into your watch list. You cannot add options into your watch list. So it's not that this software is not designed to be an option trading software. So if you're looking for ways to add in, the Apple March 31st calls or whatever the next strike or next expiration is, April 1st calls, you can't do that on Traders Pro. It's designed to be a stock trend trading stock software. Now you could look with your broker. Sometimes your broker will have software that could track that, or where you could build watch lists for your option trades, but you're not going to be able to do that with Traders Pro because it's not designed for that. It's not designed to be a option trading. So typically with option trades, you're doing more day trades or swing trades, and the Traders Pro software is more of a position to longer term trading type software. All right, so the sentiment indicator is still it's high, not in the extreme area yet. None of these are extreme yet, so that it tells you that if we do continue to rally, we should continue to run for a little while. The buy-sell ratios, again, they're wide but not extremely wide. This sentiment indicator is getting a little bit closer to that overbought area, but still not quite there yet. Again, none of this is really showing us that the market can't keep moving. Now, let's get to the charts, because the one thing I did talk about is that we have moved up pretty far, pretty fast. We could consolidate a little bit, whether it's a pullback before going higher or move sideways before going higher. Now, yesterday was interesting because there was as much as far as we'd moved up right here, and we had talked about how we had cleared that that downtrend line. I'm not going to draw great lines here, but that was supposed to, and we cleared this previous high right here. We cleared the downtrend line with this move up, and then yesterday what we had is for the first day in a while, we had a down day, and we closed below the low of the previous day. Now, anytime you close above the high of the previous day or close below the low of the previous day, when it's in the opposite direction, it can be significant. It's not always triggering a reversal, but it's something that you pay attention to. So if you're moving up, you want to look for when you finally close below the low of the previous day. That happened right here. That can be significant. It could indicate that you're either in a trend reversal or close to a trend reversal. When you're moving down and you finally get a close above the high of the previous day, which happened right here finally, it can indicate that a possible trend reversal. So when we got this close below the low of the previous day after going almost parabolic for those days, that was significant. Now, what I was looking for, and what I'm still looking for, is okay, if this isn't now in a trend, if this is now in an uptrend, then how should it behave? Well, you should have impulsive up, and then when it pulls back, it should be more choppy, more sideways. It should be more corrective looking. And then once that is done, it should resume another impulsive move up, and then choppy and sideways, impulsive move up. If this is a correction within the downtrend, if this is just a rally within the bear market, a lot of people are talking about this latest rally as being a rally within the bear market, then what I would have expected today would have been more selling. That's possible. We still get that. Maybe by the end of the day, it comes all the way down here, and if so, then it's looking more impulsive. And what I was kind of watching is if today after yesterday's move, if we would have opened flat or up a little bit and then traded back below this breakout area, that was a key breakout area right here that we broke above. We would have gone right back down below it, and volume would have started coming in. The VIX would start spiking. Then, yeah, maybe you're in an impulsive move down, and you're going to end up retesting these lows or going below those lows. But what we're getting today is we're getting an attempted rally back up. Now, I'm not saying this is going to lead to an immediate move higher. I could easily see where, maybe tomorrow is down and it looks more choppy. It ends up looking a little bit more choppy, more sideways, because it can move sideways and alleviate that overbought rally right there. It could alleviate some of that that overbought condition. And it wouldn't surprise me if it does come back to this breakout area right here. So maybe tomorrow we have a move down, and I'd watch, if we did, I'd watch to see if this holds as support. And that could be a really good buying opportunity at that point. If it kind of comes back down, pulls back a little bit, moves sideways a little bit, hits this previous area of resistance, and then you get a bullish day after that, and maybe this market takes off again. And that would probably be into next week sometime. But that would be more confirmation that we have further that we're going to continue to rally. If this looks more corrective after this this is clearly an impulsive move up. So again, all we're doing here is we're applying just those characteristics. Doesn't mean that's what will happen. I mean, it could easily look like it's sideways and then suddenly just fall apart and come all the way down here. I mean, if you look back over here, you can see, well, here was an impulsive move up. It started to move a little bit sideways right here, and then, man, it had another move down before going higher. It doesn't mean that it's always going to move the way those characteristics are, but once we understand that's how trends typically move, not exactly, but that's how they typically move, is they alternate between impulsive and corrective, then it becomes easier to kind of read what's going on, or read what's more likely to be going on here. Now, this is not the only thing we'll look at. We're going to go down through the list. We'll look at other indexes and things like that. Another thing that we talked about on Tuesday, and we'll skip to it here, is the Russell 2000, because we're really watching closely this. Remember, this is that support of the support. This was support of the sideways range from all of last year, and we bumped into it as resistance after we broke down below it. We pulled back, tried to rally above it here, didn't pull back, tried to rally above it here, and then yesterday again we had this bearish candle that was clearly moving away from that area. Now it's kind of reversing again today. We'll see if this ends up again can break out above that. If it can break out into that area there, the small caps can break back up into that zone. That'll be pretty bullish for the market as well, and that would be another confirming factor that would suggest that the trend, at least as right now, is moving upward. I know it doesn't make a lot of sense if you try to understand how the market could be rallying with all this bad news out there and reasons to believe the market should go lower. But I learned long ago that the market doesn't always make sense, and if you're not careful, that you can end up losing a lot of money trying to expect the market to do what you think it should do. As trend traders, we try to take our ego out of it as much as we can and just try to focus on what is it actually doing. And that's what I'm trying to do here in analyzing these charts. What is it actually? How is it actually behaving right now? And it's especially with the way it's looking today so far, it's looking like it's kind of setting up for maybe another run higher. But like I said, it could, you could still get another day where it dips down a little bit, what the kind of that area I keep an eye on, getting back to that SPY chart, is here it is right here, that previous high right here. See if they can pull back into that. Doesn't have to, but that's something I would kind of watch for. And again, lock it. We have about 2 hours before the market closes. Sometimes in these classes, you start analyzing it, and then you look at the same chart an hour later, and the market is completely reversed, and maybe it looks very bearish going into the close. We'll see if that. We'll check it at the end of class just to make sure it still looks like it did in the beginning of class. All right. Couple other things to watch. Bonds. We talked about bonds being oversold, probably due to get a little bit of a bounce. We saw a pretty sharp bounce yesterday. And then it's kind of back. It opened lower today. It's trading higher than where it opened, but it could be very similar to what we saw right here, where it's just kind of moving sideways to alleviate that oversold condition. You can see that just that spike from yesterday, we were all the way to the far left side in that extreme range, and just that big spike we had yesterday pushed us out of that extreme range. So the trend is still down though until, and I told you what we'd look for as a very early sign that maybe you're getting a trend reversal in bonds is if we can break above that high right there. That would give you the first higher high that we've seen in a while. And then if it pulls back, you'd see if it gives you a higher low. And those would be, again, that would be early clues that it's acting like an uptrend. And I'm not going to spend too much time on the others. Gold and oil. Oil is significant to what we're dealing with. Oil's been on a tear. It keeps going higher. I mentioned we had that big run up. We had this big drop. That looked like a trend reversal behavior, the pulse up and pulse down, but I just felt like oil's not. I didn't see oil reversing into a downtrend that quickly with all the demand out there right now. And sure enough, it shot right back up. Now, if it keeps getting higher, if it gets up towards these previous highs, that's going to be more bearish for the market. It means those just high inflationary costs. We're already seeing it at the gas pump. All of us know personally the pain of filling up our gas tanks right now, and that's going to continue to put that pressure on the economy as a whole, and that's what's getting a little bit scary here. And again, that's why it's hard to be bullish on the market with some of these headwinds that are in place. Dollar again looks like it's still trending up after coming out of a correction. We'll see if that continues. The VIX keeps dropping, and one of the things that I was looking at this morning is the market. At one point looked like it was heading a little bit lower, looking a little bit bearish early on, but the VIX was actually going lower as well. So it was one of those weird things where it was showing me that there really was a lot of fear or concern with even the selling from yesterday. And so we'll keep an eye on that. The VIX doesn't show you something every sintle day. I know we look at it in these updates each week, but I think it's important to realize, I do mention it from time to time, but it's good to repeat it, that the VIX isn't going to show you something significant every day. And if you're looking for it to show you something significant, then you're probably reading it or using it wrong, most of the time, the VIX is going to just confirm what the S&P 500 is doing. The VIX will be down when the S&P is up, and the VIX will be up when the S&P is down. What you look for is when the VIX and the S&P are moving in the same direction, or if they're moving in bigger percentage moves in the opposite direction. Meaning you might have a day where the market is down a little bit, but the VIX is up a pretty big percentage. that could tell you that maybe there's a little bit more fear in that selling than is what's showing up on the drop, and that could be something that you could consider in your decision making. Never are you going to base your entire trading decision on what the VIX is showing you, but it is an important confirming confirmation analysis, part of the process of getting confirmation, looking at different clues that can be very helpful once you know how to read it. Chip stocks are up pretty strong today, and that'd be a good bullish sign. They're right at the highs of the day. This is the SMA, so this is the whole chip sector. I know NVIDIA had a really strong day today, and you could see why I was anxious to jump back into that stock in the portfolio. So a number of chip stocks tend to be a leading indicator, particularly of the NASDAQ 100, and so that's a pretty bullish sign right there that those are performing pretty well today. We'll see if that continues. All right, and then Bitcoin. We can look at Bitcoin. Bitcoin actually has a pretty good update today. We were wanting to see if it could kind of break out of, well, you could draw like a declining little trend line right here, see if we could break out above that. I'd try to make it almost as much of a sideways, because it's overall been in a sideways range. See if we can get above here would be pretty bullish for Bitcoin, and we could see it take off, I think, if it could get back above there. It went lower here after trying to rally. It went lower here, coming back up to that same spot, it dropped. Can it finally break out above it? I think that would be a pretty good sign that maybe you're moving up the right side of the bowl, so to speak. All right. So I think we can start looking at some new stocks to add. Although some of these I've already I noticed that some of them are still on the watch list. I've added them before. One that I was looking at, I still wanted to kind of stick with computer and technology, or in the computer technology group, because if we are rallying back up, that you'll probably find a lot of stocks have been beaten down in this group. I think we might have gone over this on Tuesday, this DHX. If not, I'm going to go over it now. Now, what I like about this one is it seems to be forming a symmetrical triangle pattern, and the way it looks, the way it's acting, it should end up breaking out above that, which would be more bullish. Now, you could wait for it to break above that, or you could just wait for it to go back to a buy signal. I like the larger context of this chart too. If you back out a couple of years, you can see that. You've got a nice little range there. It looks like it's, and like right here, there's your triangle formation. This should break out to the upside. And what's nice about triangle patterns is there's a rule of thumb with these that you could use, especially with one as big as this one, that usually when they break out, so again, we're assuming it'll break out to the upside, but if it does break out to the upside, you can take the base of the triangle. So where's the base of the triangle? If this extends all the way out to the point, what's the base? This would be the base of the triangle. You can take that distance right there, and you could project it from the breakout point. So we could project it from the breakout point, and I'm just eyeballing it, which I usually do anyway. I don't, it's not usually going to be exact. It's going to be general, and it doesn't have to do this, but that, we call it a rule of thumb because it happens a lot of time, enough times where we can have a lot of confidence in it. But that could, if it breaks out of this, it could really go on a big run potentially. Now, again, it doesn't mean it's going to do that immediately. It could grind it out and make that move over several months, but that would be a pretty bullish sign if it could break out above that. Now, what's nice is that this one has potential for a big move, and you don't have to get into it right away. You can wait to see if the market becomes looks a little bit more bullish and gives you a little bit more stronger bullish signals. Even another day or two, the market could look stronger before it finally breaks out of that range, and gives you that probably go to a buy signal too at that point, and would give you a little bit of a higher probability trade. Very close to going back to a buy signal, as you can see up here. All right. Now, another one I did cover on Tuesday, it was this BILL. We already have that in the watch list. Again, I like the big pullback right here. This looks impulsive. This looks corrective, and then it's looking impulsive again. I think I'm going to add that one, mostly because I want to kind of I just want to get diversified a little bit. I've got a lot of aerospace. I basically have aerospace. Well, I did add Tesla and NVIDIA to the portfolio, but it'll allow me to just diversify a little bit more. I'm going to put the stop down below here initially, which would be what is that low right there? About 166. I'll add that in a little bit later. I'm going to go through the charts, the individual stocks right now. Go back to computer technology. Go down the list a little bit. There's just ON Semiconductor right here. ON is ticker symbol. 91 strength rank. So we're going down a little bit lower strength rank here, but there's some decent patterns down here. And again, what I like about this is I like the longer term chart off of this one right here. And, it looks like you've got this kind of corrective type behavior after this run up. Now, this is another one where you can draw that trend line down and wait for it to, I know we got a buy signal today, but you could wait for it to break that trend line as a little bit additional confirmation. We're right at it. And this looks like a little bit more of a descending triangle formation. But again, if it breaks out above there, take the base of the triangle, project it from the breakout point. This thing could have some room to run if it breaks out of that. That was a nice pattern there. And then I know one that we've had on the watch list before. I've actually traded this one before. I don't know if it's still on the watch list, but this SYNA Synaptics 91 strength rank. Again, what I'm looking at here is just you have this deep pullback right here. You have kind of a little bit of a sharper move up, and then this looks really corrective. If it can break out above this range right here, again, it starts to look like it's moving up the right side of the bowl if it can do that. So I'd probably wait for a little bit more confirmation on that. And that's probably about where's the buy signal? Yeah, you're at the left side of the hold range here. So probably by the time it moved over here to the buy signal. You'd probably be pretty close to breaking out above this area of resistance right here. But throw that one in the watch list and keep an eye on that one. In fact, I'll just go ahead. It might already be in there, but I'll go ahead and put it in. Click on this little green plus sign. It says, see where it says add to watch list. And we're going to add it to the stock specific class watch list. Click on save. All right, let's go into a couple other sectors we haven't been in for a little while. Industrial products. Let's look at the one at the top of the list there, SYNL. Went back to a buy signal today, but again, it recently broke out, pulled back to the breakout, a little bit of a hammer candlestick formation there, and now it's moving higher again right there. This looks like it wants to go higher. Nice uptrend. And then I was looking in industrial products in the whole or the buy section here. I think this is another one I've had on the watch list before, which is this Encore Wire Corporation, WIRE, 95 strength rank. And again, on this one, you need to probably back out, see the bigger chart. This nice run up right here. Look like it's pulled back in a large ABC pattern. And it's starting to work its way back up again. It's already at a buy signal. And it's, it has, but it had this little, it has pulled back a little bit here, but it looks, this is looking a little bit more corrective on the pullback. And looking like you're kind of moving up the right side of the bowl. Anyway, that one looks pretty good. And then under business services, I was looking at this IT Gartner Incorporated 91 strength rank. And again, a little bit bigger context here. 2-year chart, you can see that nice big run up right here. And then since then, it's been kind of pulling back in a little bit of a choppy fashion. Now, it's important to see that context, but I think it'd be wise to get a little bit more confirmation here. All the way down here, you've had lower highs, lower lows. We're real close to going to a higher high. You could wait to just at least give you it's the first higher high after that pullback. So maybe wait to see if it can break above 308, 309. Give you a little bit of extra confirmation on that. Not a bad idea. And then one more under business services. Marvell Technologies, 90 strength rank. MRVL is a ticker symbol. And again, very similar. You'll notice what's common with a lot of these is they've had big pullbacks, which a lot of stocks have on that recent selling in the market. And if the market has a big pullback that we've seen. So obviously, if the market is going to rally from here, these stocks should rally with it. At least they're acting like they should rally with it. Looks like it's going back to a buy signal today. This is another one, though, that if you wanted to, you still have lower highs, lower lows through here. Could you wait if you wanted a little bit more confirmation? Could you wait for it to at least break above here, go to a higher high. Yeah, it's up to you, but that's something you can consider. All right, so the portfolio, I'm going to add to it because, as conditions are, we've had this big pullback. We're in cash. As the market is looking more and more like it wants to go higher, that could change, but as long as it keeps acting like it wants to go higher, we want to start putting more money to work. Now, if it reverses and starts going back down, we'll just go right back to cash again. We'll go, just start getting back out again if it starts to look like it's heading back down to another low. But I don't want to wait too long to start adding. And by the way, I just can't. I like our positioning because even if the market starts selling off again, the sectors we're in with the energy and with the Feds, I think those are going to hold up pretty well. They're not likely to pull back as much if the market pulls back or goes a little bit lower. And so we could hopefully be able to go back to get out of those and go back to cash without too much damage. At least that's the thought process there. It doesn't always work out that way, but let's take a look at now BTU. We're right at the previous high right here, and we do have a little bit of a bearish candle today. So we'll see if this pulls back a little bit here. I'm going to try to stay patient on these though and let them run. I don't have really a spot to raise my stop. If it does pull back a little bit and then starts to move up again, then I can have a place I could move my stop up. I can move it right up below that low, but we haven't pulled back for this whole rally up pretty much. So the stop is still down here. Hopefully it gives us a spot where we can kind of move it up, start trailing the move a little bit. OAS, this is still looking fine. Now, we have moved a little bit sideways here on OAS, but if it starts taking off and breaks out, starts moving in an impulsive way, we can move our stop right up to that area right there, lock in some of the gains that we've already made. CLR, a lot of these are the same. There's really no place to move the stop up yet. RTX has had a pretty good move. Well, it had a nice move on Tuesday. Yesterday, moved up a little bit. Then basically it's been stalled out, to be honest with you, the last couple of days. But I don't see a reason to bail on this one. This still looks like it wants to go higher. LHX still looks good. NVIDIA, I told you, had a nice big move today. And again, what's also significant here is that it found a little bit of resistance right at this previous high right here. Dropped a little bit. Now it looks like, as of right now, it looks like it's going to close above it, which would be very bullish for the stock. Now I'm going to wait to see if it can, move up a little bit further. But then, one of the first things I want to do is see if I can't get my stop raised up right below that low right there. But it's a little bit too soon to do it now. But if it can move up a little bit further, I do have a spot where I can move my stop up there. Tesla, a little bit of a bearish candle today, but it's had a really good run. I still like that that run it's been on. All right, so what am I going to add? I wanted to add BILL. And I'm going to put my stop right below here. At 166. So let's add this to portfolio. Stop at 166. I did 25 shares. Yeah, that's about all I could. I might have to lower that. See, the problem is that we're trying to balance this. I'd like to try to keep the amount that I have in the trade. I like it around that 8 to 10,000 area. This is below that, but my portfolio at risk, I want that to be between 1 to 1.5. And we're kind of, because we don't have a place to put a tighter stop, really, we're kind of forced to just have a little bit of a wider stop right there. But I need to get that risk down. So what'll end up is it will have a smaller position size. But one way that you could fix that is if you could start with a smaller. I don't like to do this in the portfolio because it. Well, let me go ahead and place this here before I'm going to go down to 20 shares. It's 22. 23. Let's go 22. 22 shares would put my portfolio at risk under that 1.5%. Only 5,000 in the trade there, but that'll work. All right. So what you could do, so the reason why we couldn't get a big position is because we're getting in right here. I like to put my stop at a point where I know I'm probably wrong. At least starting this trade out, that would be right here. That's a pretty wide range right there. Now, we only have 5,000 in the trade. Maybe I wanted to have 10,000 in the trade. Well, if this stock pulls back and then starts to move up again, I might be able to move that stop up into here, and then I can maybe buy another 25 shares or something like that. Now, I don't do this in this portfolio because it starts to get complex. If I'm adding to positions, I'm trying to keep it just as simple as I can. It is already kind of complex with some of the ways I trade the portfolio for the class here. But I'll just point that out. But that is something you could consider is adding to it, and then where you're getting that $10,000 position, but then you've also reduced the risk, because now you're basically at a trailing stop on that first trade you got into, and a small stop, tighter stop on the new position you're getting into, and so it reduces your risk exposure in the trade, which is what you're trying to manage. You're trying to make sure you're managing that risk exposure. Now the other one, this is off of the watch list here. I can't remember when we went over. It might have been on Tuesday. We did some. Yeah, it was on Tuesday. We did some of these stocks. Cloudflare, though, NET. It's gone back to a buy signal. Oh man, that's real close to just I could wait on that to see if it breaks out above there. Again, part of the problem too is that I want to show you how to do some of the stuff, and I'm not going to have a class till Tuesday, and by Tuesday it could be up here, and yeah, it broke out above there, but now we also have a wider risk there. So I'm going to go ahead and just get into this one. It might end up being that I'll end up getting stopped out and taking a loss if I would have waited for confirmation, I might not have ever gotten in, but I'm going to get my stop down below this low, this previous low right here, which is at $80.85. So we'll just say $80.80. Put the stop in. $80.80 for the stop. Oh yeah, see if I did 75 shares, I'd be about 9,000, but I'm way over on the portfolio risk, so I got to come down on that. Let's see, boy, we got 50 shares. No, 50 shares is still too much. 40 shares is right at it. Just barely over the 1.5, which is close enough. I think we're fine with that. Total cost in the trade, just under 5,000. So we don't have very big positions here on these, but let's go ahead and get into that. Yeah, the question here is on the current chart, Bill is still a hold and net is a buy. This gets into there's lots of different ways you can manage your trade. If you want to use just the pure signal approach, and you don't care if it's breaking to a new high or breaking above a triangle or all that other stuff, you're just going to go purely off the signals, and you want to keep it real simple like that, go ahead and do that. There's no perfect way to enter a trade. There's no perfect way to set your stop. There's no perfect way to exit a trade. The biggest thing is understanding why you're getting in. And like I said on net here, would it be a little bit stronger confirmation if it already has a buy signal, would it be a little bit stronger confirmation if I waited for it to break above this resistance area? Yeah. And I probably should. But that'll probably happen tomorrow, and then I can't show you how to, for those that are looking to how do I even place a trade, how do I do that, how do I put it in the portfolio, I can't show it to you. So that's what I was trying to explain before I place a trade is, yeah, I probably should give it an extra day or so to see if it breaks out above this high, but I'm going to go ahead and get in. It is at a buy signal, so if you're going off of off the pure signal, then you could have gotten in any one of the last 3 days here. On BILL, it's still at a hold signal right there, pretty close to going to a buy signal, and you could wait for that buy signal. What I'm looking at here is that this is either wave A, wave B, wave C of a bearish ABC pattern. And usually wave C will be about the same length as wave A. So if that's wave A, then wave C will probably end right about here. And then maybe this thing tumbles and goes even lower. Or if it's already pulled back in its correction, which I think it looks like it has. And again, I'm going off of what the market is starting to look more and more like it's done going down. So I'm assuming that that's the pullback. That could be your ABC pattern right there. And this could be the start of a new uptrend. This could be wave 1, wave 2, wave 3, wave 4, wave 5, and we have a lot further we could go up. Wave 3, 4, 5. And if you don't understand these Elliott wave counts, you can go to YouTube channel, go to the Traders Pro page or channel, go to YouTube website, go to the Traders Pro channel, and then look for the Elliott wave analysis training, and it'll teach you what these waves mean. And there's about three or four classes on Elliott wave analysis that'll teach you that. The bottom line, though, is if this is the start of the new uptrend, we have a lot of upside to go. Let me go down to a 1-year chart here. If this is wave A, wave B, wave C, and we're going to roll over and drop, well, even if that's the case, there's a high probability that we would still move up in this move right here. So my decision, I'll just get in right now. If it doesn't even do that and it rolls over, comes down, okay, then there's my stop. There's where I know I'm wrong. And I better be willing to take that risk. That portfolio risk was between 1 to 1.5% portfolio risk. What that means is that I'm willing to risk 1 to 1.5% of my portfolio on the trade. I remember it was close to 1.5%. So basically, on a $100,000 account, I'm willing to risk $1,500 that this thing is going to go up and not down. If it does go down though, and I get stopped out, I'm going to lose $1,500. If that's too much, and you can't, you're not willing to risk that amount, well, then you're going to have to either you can find a tighter stop to reduce that amount, but then the problem is that maybe it can pull back, stop you out, and then go right back up. It could be too tight. Or you could significantly reduce the position size to where if it did come down and stop out, it would be, a $500 loss or something like that. But you'd have to manage that. And by the way, I've got trainings on those as well. If you want to look at different trade management techniques and how to manage reward to risk and tons. If you're not going through that YouTube channel and educating yourself on that stuff, it's all there, man. I went through and I did a training on just about anything I could think to do a training on. It covered about 1.5 years, I think, every week, and so there's a lot of information in there. Now, again, it can be overwhelming. You're like, man, don't let it be overwhelming. Just start. Just start by going through a training a week or something like that. And as you do that, you'll just improve your skill and your understanding. And I mean, that's what I had to do. I rattle off all this stuff, but I've been doing this for over 20 years now, almost 25 years now. I mean, I can't even think of the number of hours I put in to get where I'm at now. But I started where you're at now, wherever that is. I've been where you're at now. Maybe you're not that far behind me right now. Maybe you've been doing this a long time. But the point of the training, though, is to speed up the learning process where you don't have to make all the mistakes I made learning what I've learned up to this point. And I try as best I can in those trainings to break it down into simpler, take complex principles and break them down into simpler analogies or simpler things that's easier to understand and all that kind of stuff. But anyway, hopefully that answered your question as to why I did that. I like to mix it up a little bit with the portfolio, so it's not always doing the same technique. I'll base my entry on some different things. Sometimes I'll base it off of just a bullish candle or something that I see that sometimes my exit strategies, one thing that I tend to do, if we go back to oil, for instance, a lot of the oil charts are getting a little extended. Let's look at like BTU. So we're almost in that extreme reversal risk area right here, right? If we get into that extreme reversal risk and we're looking like we're going straight up, well, one thing I don't like to do is I don't like to let those gains turn into losses, give it all back. I feel like I can always get back in when a trend is getting overextended. I can always get back in again if it's going to keep trending up. It'll have, at some point it'll have a pullback again, and then I can jump back in it. And so sometimes what I'll do, and I may do this with these oil stocks, is instead of waiting for it to go to a sell signal or even to a hold signal, I might just say, as soon as this closes below the low of the previous day, I'm going to get out. So today it doesn't look like it's going to. It looked like it for a while there. It looked like it was about to close below yesterday's low, but it's come off the lows of the day, so it doesn't look like it's going to close below yesterday's low today. But maybe tomorrow it closes below today's low, and I go ahead and ring the register on that. Go ahead and take the profits off the table on that. Now, I've done, if you think that's the perfect exit strategy, I'm telling you, I've done that before on some of these trades, and it turned right around and took off again, and I missed a big move. But I've also had a ton of them where I've done this, and it comes all the way back down to here, and I didn't give back all the profits I made either. The bottom line is, I know I can get back in again. I feel like I don't feel like it's all or nothing. I feel like, hey, I'll get another chance. I have that bus stop mentality. I'll get another chance to get in, and maybe I'll get another chance to get in. It won't be on an oil stock. It'll be on technology stocks that are maybe starting to run again and take off, and I'll make my money on those. But the bottom line is there's no perfect trade management technique, money management technique. But you got to have one. You got to have a plan for how you're going to get out. One of my favorites is just to use a trailing stop method where you get a little bit of a pullback and it starts to go up again. Then you just move that stop below that next low, and then when it finally does come down and stop you out, now you're out of the trade, but you've identified where you're getting out of the trade. That's the most important thing. It doesn't matter what. I shouldn't say it doesn't matter. It's got to work. I mean, in the long run, you got to make sure you're making more money than you're losing. And if you're not, then you got to make an adjustment to your trade management plan. But there's a lot of different ways you can do it. Now, you say, well, Jerry, I thought that's what the signals were for. And they are. I mean, but here's the point. Usually when people just want the signals, that's all they want is the signals. They're not spending an hour of their week for me to teach them how to trade. For those people, they don't want to learn how to trade. They just want the signals. They want it simple. And you might be that person. And if that's the case, then you probably want to spend less time listening to me and just more time focusing on the signals. And if that is you, that's all you want to do, let me know, and I'll do a full class where that's all we'll talk about is what are the signals telling us to do, and that's all we're going to follow. That's what the software is designed to do, is to make it simpler. But I always point out that if you are willing to take that extra step to learn some skills of how to analyze a chart, analyze chart behavior, analyze price action, you can get better results than just the signals because you'll be a better trader. And so anyway, that's, if there seems like there's a little bit of a conflict there isn't. It's just that typically I over the years I just realized my audience is typically people that want to learn more and want to learn new things that they didn't know before and improve. And so that's why I try to spend a little more time in these live classes doing is teaching you some of those things teaching you things that I would do if I were managing the trade. All right. I mean, one of the things I did is, remember when we were starting to sell off, remember how boring it was for a couple of weeks here? We were sitting in cash doing nothing. We had nothing in the portfolio. That's exactly what you should have been doing during that period of time, is wait for that drop so that now we have all this cash to start getting back in when it's looking good again. Instead, we could have been down $30,000-$40,000, and now what we're trying to do is just get back to break even during a whole big run up in the market. All right. Hopefully that answered some questions there. If, by the way, if not, send me a follow-up email, and I'll be happy to explain them in a little bit more detail, or make sure I answer the question you were asking. All right. Thanks, everyone. Have a great week. We'll see you on Tuesday for the next market update. And again, hopefully by then we'll have even more clarity as to whether we're in an uptrend or not. And we'll go from there. Have a good weekend, everyone. Bye now.